Trading forex, would never need no record deal. Making my own investment, market printing me money.
Peace guys, welcome back to ZENSFXHUB, where fundamentals is simplified. And today we're going to be talking about risk management. But before I get into that, I want to show you guys an update on some trades that I took. So these trades I actually shared in my market breakdown video. So I did end up pulling on silver. Almost hit take profit. Look at that fucking wick right there. Crazy, right? So still bullish on this. I'm holding, and then I did end up pulling on gold as well. So gold right now is up in profit. As you can see, gold almost hit my take profit level, but I decided to take off the take profit levels on Trade Locker because I felt like I would just I think gold is going to reach new highs. So I'm like, you know what? Instead of me taking profit there, I'm going to let gold run for a little bit, okay? So today we're going to be talking about risk management, all right? Risk management, okay? And I wanted to make this video because I did a poll on Instagram where I asked people what's the next video you guys wanted to see in risk management. One, if you guys want to be able to get some input on my YouTube channel on what you guys want to learn about next, follow me on Instagram because I do polls there. I tried to do one on YouTube, but it didn't let me, so I'm gonna just do all my polls on Instagram on my story. So make sure you follow so that you can stay up to date with what's going on, okay? I know there's a lot of different type of opinions and perspective within our field that talks about risk management. How some people think risking 1% is great, some people think risking 1% is for pussies, some people risk 2%, 3%, 5%. Some people don't even trade with a stop loss. So that should tell you right now, they just risk is out the motherfucking window. They don't want to trade they don't want to live to see another day to trade. All right, I'm gonna tell you my opinion. I can't go based on other people. I could just tell you what works for me. Okay, the first trade that I took, I would risk 0.25%. So that means when the market was either in an uptrend or a downtrend, the first time I get in before it started to trend, I would risk 0.25%. Now, I know you guys are probably like, what the hell? What can you possibly make risking 0.25%? Stick with me, right? The reason why I did this is because I could take 4 trades on 4 different pairs, and if I lost all those trades, I will only be I will only be losing 1%. I will only be losing 1% on my account. That means, right, all I would need is, so a 1-to-1 risk to reward, I'll be break even. BE means break even. A 1-to-2 means I would make up what I lost, make up loss, and profit. And then 1-to-3, 1-to-4, 1-to-5, so forth and so on, right? So this is why I decided the first time I get in, I will only risk 0.25%. Now, another thing that was crucial about this was the fact that, let's say, for example, I did lose all 4 trades back to back. Let's say I only took 2 trades and I'm only risking for those 2 trades 0.50%. It wasn't going to take much for me to make that back up. A lot of you guys, right, and this goes back to the video I talked about, the 6 tips that I gave you guys. A lot of you guys worry about how much you're going to make versus how much you're going to lose when you're trading, right? And when you use high lot sizes, if you lose those trades, you have to make that money back up. So let's say, for example, you want to hurry up and make $2,000, so you use a big ass lot size, but then the trade goes against you. Now you done lost $600, $700, and you have to make that back up. A lot of you take emotional hits. A lot of you guys get beat up by the market based on you trying to be greedy and hurry up and make a lot of money because of what you're seeing online and what you see what trading could do for you. So by risking 0.25%, if I lost a trade, I will only have to make up out of these 4 trades maybe $100. And this goes back to what I said in my interest rates and my inflation video. When I was talking about interest rates, would you rather pay back $200 or would you rather pay back $900? Which one is more better if you're borrowing money? Would you rather pay back $900 or would you rather pay back $200? So this is why it's super important to know what the interest rate is, because that will let you know when is a great time to borrow money. Any sane person would say 200. That's what was my logic going into this. I would rather risk small so that if I do end up taking a losing streak, like how I did in the first 2 weeks of June, I had a 2-week losing streak. I would rather have to make up 1% than to have to make up 5%, because I decided to over risk and not have my risk management in place, right? Another thing that goes along with this was, right, so whenever I would take my second trade, right, and this goes for my second, my third, my fourth, however many trades I get in, when I take my second trade, right, and this would be me scaling in. So that means the market is in the uptrend, right? So I would get in here, right? This is where I would get in. The market will go up, come down, go up. So when the market makes this higher low right here, I would get in. So this is my first trade, and then I would get in for a second trade. So on this trade, I'm risking 0.25%, right? And then on the next trade, I will go up higher in my risk. So I would probably risk anywhere from 1% to maybe 3%. And the reason why I did that was because whenever the market is actually trending, whether it's up or down, the market will probably be in drawdown. When you get it for your second trade, will probably be in drawdown for a little bit before it continues to go up, or vice versa. In the downtrend, it will be in drawdown for a little bit before it continues to go down. Whatever my stop loss was, whatever I was risking for my second trade, that money was coming out the profit that I already made from my first trade. Let me break this down to you again. And I'm gonna try to break it down simpler. Instead of me, when I get it for a second trade, instead of me risking my actual account balance, I will be risking the profit that I'm making on my first trade, right? So that means on my second trade, if the market did hit my stop loss, it wouldn't be coming from my account balance. It would be coming from the profit that I'm up in my first trade. For my second trade, I'll put it here. I'll be risking anywhere from 1 to 2%. Okay? And like I said, the reason why I did that was because whatever I'm risking for my second trade will be coming from the profit from my first trade. And I'll write that down. So the risk amount, I can't spell today, guys. All right, God damn it. The risk amount comes from profit of first trade rather than account balance. Okay, so let me turn my phone off. So yes, and then I would do the same thing with my third trade or my fourth trade. Whenever the market came down and created another higher low for me and go back up, I would get in for a third trade. Now, by the time the third trade comes around, I most likely would take full profit from my first trade, take a little bit of profit from my second trade, keep some of my second trade still running, and then get it for a third trade and risk anywhere from 1 to 3% again. And I would rinse and repeat that. So by me taking this with me, right, and constantly rinsing and repeating this same thing right here, I was able to pass 2 funded challenges within a matter of 4 months. And again, I lost those challenges based off not really understanding the rules of the funded companies. So guys, risk management is super important for you. If you want to, number one, live to see and trade the next day, please protect your account at all costs. The whole point is for us to come into this market and make money. If you are constantly blowing accounts at the accounts, you are over risking, you are over leveraging, you don't have your risk up to par, right? This allows you to protect your account. And then by you taking this method right here, we're gonna call this the ZENSFXHUB method, because I don't know if there's a trader out here who does this, right? And I'm putting my stamp on it right now. And if you think somebody out there does this same exact shit that I do, send them my way and I'll see. But as of right now, this is a Zen's method, okay? And I'm gonna write that down. This right here is the ZEN'S method. Okay? Stop playing with me. I'm leaving my mark in this industry. Okay? So do this, and then and this will be a separate video when you are ready to scale up, when you are ready to risk a little bit more. So this first trade may be 1%, and then the second trade might start from 2% or 3%. I was supposed to write 3% here, so I'll go ahead and fix that. So then as you continue to grow as a trader, you get more confident in your strategy, you get where you want to be, then this obviously could change, but you can still use the same method, right? Like I said, first trade could start at 1%, and then your second trade could start at 3%, and you could risk anywhere from 3 to 6%. Please take into account what I said. Do what works for you. At the end of the day, I'm not here to tell you how to trade like me. I'm just here to tell you what allowed me to be able to get funded, get payouts, and then be able to put myself in a position to get funded 100K. Because like I said, if you see my 100K challenge update playlist, I'm up 5.71% on my account. Okay, so this right here is super important, and then over time, as you grow as a trader, you can gradually increase your percentage. And before we get out of here, I want to say this because this is super important. When you look at trading from percentage wise versus dollar amounts, it helps you out so much, because you could take this method and you could apply this to any account size that you have, whether you are personal with $500 or whether you're funded 5K, 10K, 100K, whatever. So me risking 0.25% on my 5K account is the same thing as me risking 0.25% on my 100K account. The only thing that's different is the lot sizes that I'm going to use, because one is a small account and one is a big account. This stays the same versus you trying to say, okay, each trade I take, I'm going to risk $100. Now, every time you lose, you're losing $100 versus you only losing 0.25%, right? You could take hella trades. I could take 8 trades and only be risking 2%. Think about that. Thank you for watching this video. I trust you found some type of value in it. If you do, like, subscribe, share, and again, follow me on Instagram, because I'm going to put up another poll sometime this week to see what other stuff that you guys want me to talk about. All right, so I'll see you in the next video. Peace.
And if you don't know by now, your risk management is your secret weapon. Not by how much you gain, but how much you lose. Make a trading plan to live by and follow your rules. Can't be mad at nobody but yourself when you got all of the tools available for you to succeed. So don't be a fool.